Hey, this is Matt from InvestiQuant. Today is Monday, June 28, 2021. This morning we saw the markets gap up pretty much everywhere with the exception of the Dow, which is that bottom right-hand chart, and we have seen selling most of the day with the exception of the NASDAQ, which is that bottom left-hand chart. So we've kind of got some different action taking place today, and we kind of had some different action taking place on Friday as well. If you kind of look at these charts, they've got the day before's price action there as well. You can see S&P up here in the top left finished pretty strong on the day, whereas like the NASDAQ finished down by the lows. And you see that divergence there as well with the Russell closing down at the lows on Friday, whereas the Dow was up near the highs. So we've kind of got some divergent action taking place today as it was on Friday as well. But what we're going to be looking at this afternoon is following up on the study on the close above the upper Bollinger Band. And it's worth noting that the S&P was the only one that closed above the upper Bollinger Band on Friday. So this pattern is only applicable today for the S&P, assuming that all of the criteria is going to be met. But it may be true in the future for one of the other instruments as well. So we're going to be looking at it anyway. Now, the setup is going to be based upon entering the market long at 3 p.m. Eastern time. And I'm doing this in all four instruments. The exit is set to the close of regular trading hours, which is 4:15 p.m. Eastern time. And this morning we gapped up, and I'm going to add that as part of the information for this test. I'm going to say that the gap was up today. And then I'm going to go into the post-open filters, and I'm going to say we are trading below the prior session closing price. So the sell-off activity has us below the prior close right now at the time of this recording. So I'm going to add that by going post-open filters, and I'm going to say that the intraday close as of 3 p.m. is below the prior day closing price. Let me hit equals here. And then lastly, I'm going to hop into the indicator section. I'm going to add that day after a close above the upper Bollinger Band, and then say above a 10 and 200 day simple moving average as well. Now I can hit view results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern time, exiting at the close, which is 4:15 p.m. Eastern time, when the prior session closed above the upper Bollinger Band and above a 10 and 200 day simple moving average. And then today you are trading below the prior close following the gap up from the morning. So you gap up at 9:30 and then you sell off and are trading below the prior session close at 3 p.m. Eastern time. Historically, this has taken place 24 times in the S&P, 33 times in the NASDAQ, 21 in the Dow, and 35 in the Russell. So it's not all that common. If we look at the win rates on them, they are all at least a little bit favorable, but the S&P is the strongest of the group at 75%. For the NASDAQ, it's 61%, the Dow 57%, and the Russell 54%. When we look at the average win and average loss, you'll see the S&P has a nice win rate, but the losses have been larger on average than the wins. And that is also the case for the NASDAQ, which has the second best win rate. Now, for the Dow and the Russell, the average win has been a little bit larger than the average loss, but those two have the weakest win rates. So historically speaking, this pattern has been a little bit favored to the upside, with the S&P being the best of the group in terms of win percentage, but it is also favored the bigger moves to the downside when it doesn't play out. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.